Hello, everyone. Today, I'm going to talk about student loan. I did have students asking about the question as follows. Seeing she applied a student loan for $14,000. However, at the end of the tax year, she received a T2202. It shows only 10,000. She's wondering what's the rest of the money. It's not shows in the T2202. Now, this is a very interesting question because we have to make sure, first of all, student loan does not equals to amount shows under your T2202. Because T2202, you might receive from one of your university or college, is showing that the name of the program and your name and your address, and then how many months have been enrolled in the program, and if it's a full-time, if you're part-time, and then you have this form, then you can use this to claim your income taxes, right? However, student loan is different because student loan does not apply the full amount into your tax return. It's a non-refundable tax credit for the student loan interest. So we're saying that is education-related tax credit. Then how are we deal with the student loan? Now, before we move on to how we're going to do it in your tax return, we first need to find out who is eligible for a student loan. The federal and most provincial governments cooperate to offer grants and loans to students in financial need. So to be eligible, you have to be Canadian citizen, permanent resident, or protected person. And you have to be a permanent resident of province or territory that issues student loan. Or number three, you are able to demonstrate your financial need. So that is, you have to enroll, of course, in an eligible degree, diploma, or certificate program. Then when you get your student loan, do you pay income taxes if you have it? Right? Now, how are you going to deal with it? This depends on how much taxable income you earn during the year. Every taxpayer claims a very basic personal amount, every one of us. For 2023, the basic personal amount is $15,000. So which means that if your taxable income is less than the $15,000, you won't owe any taxes at all. You do not need to pay any taxes at all. If you make more than $15,000, you might have to pay income taxes. Now that student loan will work at that point. Okay, so all the students know you will receive 15% of your interest to be paid back as a tax credit. And the next question, are student loans tax deductible in Canada? Okay, I have actually PowerPoint shows in there. Now, your student loan is non-tax deductible, but you can claim any interest you've paid on your loan in the preceding 5 years. Now, back to the question my student asked. Why my student loans number shows is different than the T2202? Because student loan is student loan, and the T2202 is the money you pay to the school, right? Now, you cannot claim the student loan, but when you start paying back the student loan, you actually pay the tax, the interest you owe. That interest, 15% of that interest, you could use to deduct your income taxes. What's that mean? For example, let's say Mike is a student. He started repay his student loan for 2023 last year. And this total amount, including $300 of interest from the loan. He can reduce his tax bill by $300 times 15%. So equals $45. So he can reduce his tax bill by $45. This is how you deal with the student loan. Right? Then when you have actually received that student loan, how are you going to do it? We have different steps. So be careful on that. First step, you have to make sure if the student loan is eligible for your tax credit. Now, how are you going to make sure that if it's eligible or not? You can only claim the interest paid to your student loan if you receive the loan under the 4 different acts. The first of is Canada Student Loans Act. The second is the Canada Student Financial Assistance Act, or Apprentice Loans Act, or similar provincial or territorial government law. So that is the one way that you could find out if you could claim the interest you paid out your interest to the student loan. And number two, when you find it out you're known as eligible, what you need to do. Now you can make the claim directly on your tax return. We all know that if you receive a T4, that means you work for an employer. That your company issue your T4 slips, so you can use the T4 slips to claim your income tax return. However, for student loan, if you receive any financial assistance or any grants from the government or school, they will issue your T4A. So that is the official slip you use for the tax purpose. Now, when you're ready, you could put information of all your tax slips into your return. I show you quickly. I've been using if you're using an online tax preparer software, I've been using Simple Tax. Okay, so this is Simple Tax. When you open the Simple Tax, where you need to put in here. Now this is from CRA website. There's a line 31900. That means the interest paid on your student loan. So this is the spot that you need to put into the number. How quick show? This is the T1 general. So when you need to do your taxes, whenever you have a paper file or you file online, you could get a paper package from the local post office or the local CRA office, right? Now we're looking for 31900. We see right there. So this is the interest paid on your student loan. You put a number in there. What is the number shows? If you're using an online software, you could just simply type student interest paid on student loan. It will shows right there. What you need to do, you pull your T1, T4A slips and find out description of the loan, and then you put amount of interest you paid. So I just, assuming I put $500. Then the $500 will show automatically under my T1 general 31900. So that's just $500 here. Now, as we said about that, every person get a personal base amount, right? It's $15,000 for 2023. So the $15,000 plus the $500 student loan and the times 15%. This is my federal non-refundable tax credit 2325. So this is the total amount that could deduct my income tax owing. Okay, so that is how that works, right? When you see a student loan, then how you to do it, how you find out if you're eligible, and how you're going to put it into your tax return. There's one more thing. If you are living in Ontario, I know that some of my students coming from Ontario, that may apply for you. So their Ontario Student Assistance Program, which we call OSAP, they offer students loans and grants to help pay for school. You have to pay back OSAP student loans, while grants are money you do not have to repay. When you file your income taxes, you include an OSAP grants as income, but not your student loans. Okay, so for example, let's see Mike, who lives in Ontario, was repaying a student loan and received an OSAP grant for $1,000. Then when you file your income taxes, this $1,000, you have to put it into your income, not as a student loan. Okay, that will show in your T4A, I believe. So that is for today. Next time I'm gonna record a video to talk about T2 to O2, how we're gonna deal with T2 to O2, how T2 to O2 will affect your income tax return. Okay, thanks for watching.